All right, let's jump into it. Where we at? 10:39. Actually, 10:40 now on 1st of September. So, wow, so we're into the new month. Here we go. End of the quarter overnight. And yeah, wow, what a quarter. What a month it has actually been. I mean, the quarter's been pretty crazy, but it was a little bit quiet as sort of people were coming back from summer. European summer, the true summer, the US summer, I guess, at the same time. I think they're on the same turnover. But gold just put in its biggest month in 14 years, I read. And that would must be the sort of percentage wise on that because certainly dollar wise, it has never moved like this before. Just to put that into sort of context, apart from the fact we're seeing this ugly looking V-shaped recovery here, well, ugly depending on which way you're looking at things, but let's have a quick look. If we put it on a monthly, there's your monthly candle. Apart from the fact it closed right on its highs, that's bigger than we've seen. Look at these months here. Go back. This is what we're typically used to. Sort of like, this is going back just into 2023. These kind of moves here, we're moving sideways. But even as it expanded out, we've never seen this. And then look at the size of this month here. So how big is this one here? This was 12% in 1 month. 400 bucks. I mean, if we go back to, when I put in this high, this was back in 2020, that was like over 2,000. I was like, whoa, it's over 2,000. Look at this new all-time high. I remember that was crazy. It was pumping and that. It was only $2,000. And that's like, remember, whoops, that's from whenever, wherever, kind of like, worth nothing. Bang, forever, like all-time highs at 2,000. You just did a quarter of that in 1 month. I mean, if you just stand back and look at that on a monthly chart, that's just insane. This gives the ability for it to be some incredible kind of blow off top, but still insane. 12%, 415 bucks in 1 month. So look, we'll see where we go from here, but yeah, certainly this thing is absolutely pumping on. I mean, I sort of stopped doing these because I was just doing it every couple of days, but this is through the breakout. How many times it just made continuous new all-time highs, all-time highs. Anyway, let's get back to the data there a little bit quickly. Pretty quiet, apart from actually, well, yeah, I suppose not super quiet in that, but we had a bit of China data out, nothing really too much, and that didn't really sort of give us too much, no sort of market movement. RBA came out, they held rates pretty much as expected, widely sort of called because of the last two monthly prints, I would say, is the main contributing factor for that one. They sort of held rates based off the idea that, we've had two inflation prints that have been up around that sort of 3%. So, they say that, and they tout a lot more that the quarterly is the sort of data that they look at. So I've seen gold just sort of spike up again a little bit. They say quarterly is the sort of bit of data that they kind of look at with these things. And that's obviously sort of not, I think, when was that? Must be coming out next month or this month now. And then sort of the next rate decision in November. But because you've had two of what technically would be the three for the quarterly print sort of elevated, you could probably sort of put together that it's most likely going to be above what they're expecting sort of come the sort of quarterly print. So it's a sort of a bit of a sort of tough call with Aussie at the moment because they've been saying for a while, yep, look, we're cutting, and touting that sort of it's the wording the Bullock used, not this time, but the time previously. Actually, it must be two rate decisions ago because they cut last time and they held the time before. But the wording that she sort of touted a lot was, look, it's not a matter of if, it's a matter of when, basically. So they are in a sort of cutting cycle, but then you get all of a sudden inflation's up a little bit and they go, oh, okay, let's hold off there a little bit. So she did say that sort of like, economic data locally isn't too bad, which is obviously a bit of a positive for it all. But I think they obviously, just like the RBA always do, they're sort of kind of erring on the side of caution. Hold now, wait to see what the quarterly CPI comes in at, and then they can make a bit of a decision on that. So they did say that, 2.5% on the quarterly is their target, though she did say that, even if they do come in a little bit hotter, 2.7, 2.8%, it doesn't automatically sort of mean that they won't be cutting. So it's just something to keep in mind for when the quarterly comes out, but that's certainly what we're going to be looking for. Look, Aussie moved a little bit prior to this because obviously everybody was sort of thinking, okay, look, they're going to hold, and again, it's mainly off that weak US dollar, but Aussie sort of moved all the way up from 65.20 to 65.90. So it already moved 70 points prior to the data, and then it sort of jumped about 10 or 15 points as the data actually dropped, while the rate decision. So it was pretty much a preemptive move, and ever since then we saw a little bit of a spike up overnight. Again, end of month flows, people selling US dollars, and it's coming back down now a little bit as well. So we can see a little bit of action, but I'll get to that on the charts. Um, Rest of the session, not really anything too exciting. Moving forward, the next sort of bit of data that we're kind of really looking at was the Jolts and consumer confidence. Now, jobs obviously is the big sort of topic with the Fed. Um, Jolts isn't a major one. It is one of the bits of data that obviously comes out this week, this first week of every month. We get Jolts out, we get ADP, and we get NFP. Jolts, it's probably in that order of sort of going from lower to higher, sort of market movement kind of sort of stuff. Job openings with Jolts, slightly above what it was previously. They expected a little bit of a slowdown, and it came in a little bit more positive. So that is a tick for the sort of strength on the local front there. However, at the same time, you've got consumer confidence sort of coming in, and that sort of came in. Obviously, they expected a little bit of a slowdown. What was this revised? So it was revised up slightly. Expect a bit of a slowdown, even further of a slowdown over there. So again, look, it's one of these things. You get something slightly positive, something slightly negative. Neither of these are kind of ones that define the market. But again, it's just jobs are very much in the focus at the moment. Consumer confidence, they could say it's low, but I mean, I know they say that the equity market isn't um, representation of the economy, but if confidence is so low, you got equity markets pumping at their all-time highs. So I don't know. It's kind of a little bit of sort of polar opposites on those ones there. So anyway, what we saw with that, and again, end of month flows and that US dollar took a little bit of a hit. Gold appreciated. Gold punched right back up. So gold got hammered yesterday. Obviously, end of Asia, end of the quarter. You got Chinese Golden Week sort of coming up. Excuse me. Um, it dropped off, I think, about 90 bucks or something. So it's the biggest sell down we've had since this sort of breakout, most recent breakout. But V-shaped recovery, like anything, like I showed before, and it just straight back up there. So we'll see how this goes. It's a new month. Is it going to just sort of power on? Is it going to sort of pull back? I reckon we could be due for another little bit of a pullback. Um, Certainly, there's some levels that we want to see it underneath before we see that. But that big monthly there, these are the kind of things sometimes as well. When you get this big monthly thing, close on the highs, there's nowhere for it to go. There's no range. So we may just sort of see things move back down, but I'll get to that with the charts. So that was the data from overnight. Moving up through today, a whole bunch of PMIs coming out today. Again, none of this stuff really. So we get a little bit of sort of knee-jerk reactions off PMIs, but they're not really market defining things. ADP is probably what we're going to be looking for the session. We also got sort of Euro CPI over here, looking to be fairly flat, slight little tick up on the flash estimate. The flash must be like maybe their core or something like that. But yeah, so one to keep an eye on, but not really super impactful for what I'm sort of trading in that. ADP is what will possibly sort of move the market a little bit, looking to sort of stabilize around here. This has been obviously on a little bit of, whoops, somewhere we can actually see how's it going for the year. So we are on the sort of lower side of things. You can see it is still sort of trending down with a couple of little spikes up all the way along here. You're looking for this to stabilize. Like the US really needs this to kind of stabilize because jobs is that sort of hot button topic kind of thing at the moment. This is the second bit of data. We've got the potential shutdown of the US government this week, and that this is also all based on sort of like whether they can come to some sort of resolution between the left and the right about sort of funding I guess to do with the debt levels and all this kind of stuff as well. But it seems to be that it pops up every year. It's always a freak out, and then hey, you know what? We've decided to kick the can down the road. So we'll see how we go with this. As to sort of how it affects the market, it's a bit tough to sort of call. Yeah, I wouldn't be putting a lot on it just based off purely off that. So see how we go with it all. I guess you could see some sort of maybe movement in gold based off that kind of stuff. Like, you know, again, a bit of unsurety, what's going to happen, this kind of idea. That seems to be what's fueling a lot of gold recently. It is near the highs, so we'll see what happens as we jump onto the charts with that as well. ISM manufacturing, so again, PMIs from over in the US. This seems to be sort of something. How are we going compared to us? Yeah, it's about on par with the rest of them over there. Again, you're looking for stronger numbers here if we're going to see anything for any potential upside or any potential hold with DXY. DXY had a very good week last week, opened up and just got walloped from the start of this week. Like it's just been an absolute, yeah, so kind of shit show with that one there. But I mean, that's been the theme of it for, you know, better part of the year, months and months now. And that's about it, sort of through data today. And then obviously going through, we got a bit of unemployment claims, and then we'll get to see that tomorrow. All right, so let's tick over. So we got Aussie. Look, Aussie sort of, as I said, it sort of recovered right off the lows, basically in anticipation for that bit of data to sort of be coming out there. When the data actually dropped, which was here, as you can see, sort of you got this big priced in move, data drops, and look, it moved up, and obviously afterwards, it subsequently moved up about 30 points or so. So it did move a little bit into kind of what would be the sort of the top end of this channel. But again, in the 20s, that's why we always sort of say 20s, as you can see, previous highs over here, 20s down here was the low of these levels here. 20s, 90s, and 60s always seem to be decent areas that garner a bit of attention with the Aussie. You can see that sellers obviously moved back in here. If this were to be a little bit of a channel, which seems to line up pretty well with it all, a little bit of an overshoot, and obviously bang, pushing back down in under over here at the moment. So I think if we can get back down underneath sort of 90s, because obviously, as I said, 90s is an area that gets a bit of attention. If you can get underneath 90s with the Aussie, takes you out of this channel, and you're probably looking to sort of see a little bit of a cooling. It's got this little wick down here. This is due to a little bit of a headline yesterday with China banning iron ore from BHP. It was a very fast move. If you have a look at this, this is a 5 minute chart here. So 5 minutes, it dropped 30 points and then bang, straight back up again 15 minutes later. So yeah, this goes to show what headlines can do. Some people get a little bit upset about the headlines of that, but like the thing is with these, like there's a reason. Like, you know, if you're trading along here at the time it's just moving sideways and it drops down 30 points and bounces back up, there's a reason for these things. Like the market doesn't act like this typically to go 30 points, 0.5%, and then straight back up over it. There's a headline, there's a reason. Does it define the market? No, of course not. But you know, it is something that's tradable. I closed some shorts actually through this point here because I was shorting once we got back up over the top over here. Regardless of that, if we get back onto higher time frame here, I would say underneath 90s, you probably got a safer bet. First of all, you're going to look to sort of fill this wick. We've got a little bit of a sort of support that sort of runs through the middle of this lot down here. Let's put you just over here. As you can see, buyers, and obviously that wick down there, buyers there. So that'll be your first target. Underneath 90s, look, it's not a massive move down to mid 70s. Underneath that sort of wick low, I think that opens you up to sort of move down a little bit lower. So that's the kind of two moves that I'm looking for. If we get down underneath the 70s, and then if we get underneath the 90s, those two moves through there. Underneath this little channel, you could sort of jump a little bit early with it, but there is that sort of 90s support area. I think the safer bet is obviously under the 90s down to 75. See what happens at 75. And then if you can get down underneath there, you've broken the channel, you've broken this larger kind of sort of swing low, and that would open you up, and you could probably look down. Obviously, you know, you've got a bit of support in at 62, underneath 62, and you could look for potentially this move to sort of possibly sort of come back down here a little bit. I'll be just basically keeping an eye on DXY to see if that can sort of rally a little bit to sort of hold that move. All right, move along. We've got gold. and this is what I'm talking about, this V-shaped recovery here. Just crazy sort of stuff. Look at this. It's sort of dropped down 71. Like this is the end of Asia. So 4 o'clock yesterday, as you can see, Asia closes, bang, down, and then straight back up. This is where we had that data from the US last night, and really just took off again. A little bit of a sell down as we saw the London fix. So as that sort of closed up over there, but moving over here. So what we do have here a little bit is this little bit of a support coming up through here. And you can see that although this is a big, incredible sort of V-shaped recovery, it is teetering out here a little bit at the moment. So it's not to sort of say that, excuse me, it can't obviously just kick on and go through the top. I mean, we've seen gold do this endlessly. But being the new month, what was that monthly candle? And closing on a high like this, it doesn't give it a big range to play with. So while you sort of think, oh yeah, look, closed on a high, for instance, this is a good example. This month closed on the high here. We had big pullback down underneath before shooting up higher. So it doesn't mean that the sort of thing's impacted, but it just means that you're not necessarily going to just up and go straight away. This, for some reason, this feed, and I think the other one as well, yeah, this one here, they sort of didn't have that Monday on that gap there. It wasn't a big sell down or anything. No. Anyway, um, but it's sort of it's skipping a little bit of data through the middle here. Anyway, sort of long story short, that yeah, obviously it's absolutely thumping. Had its biggest month ever, or in 14 years or something. So it's most likely, yes, we are going to see more upside, but it doesn't mean that we can't have some intermittent sort of periods of weakness. So obviously, what we're looking for is sort of a bit of an intraday trade, and to sort of say that if we break this channel, that's your first indicator. But I would say pretty much at this level over here, which have I got this marked out here? Was that the high at the time or something? Perhaps I'm not quite sure. But underneath 50, I would say you may have a little bit of a short opportunity. But you know, whoops. Yeah, I'd like to sort of see this possibly. This zone here. They're your kind of sort of short-term pullback zones, and if you want to sort of be long, maybe boom, you can push that up. But the thing is, though, if we sort of come through these, particularly if we get through 37, I think there's a good chance we go back down and test these lows down over here. Given the idea that sort of that would technically give you a lower high through this move, we've got the new month, so a pullback's very healthy, even if it is to be going to 4,000. But you know what I mean? It's a little bit hard to stand in the way of this thing. But as we saw yesterday, once they started to sell it, they really hammered it down. So we'll see how we go. But they're the two levels I'd like to see what happens. Underneath 50, look down into sort of 30 to 30 to so 31 to 37, this kind of zone under here. But underneath 30, I think you could pretty much say that yeah, you're going to target the sort of 3,800. They're a little bit overbought in this one here. 4 hour, it's moving back up there. I mean, this could, if this pulls up strong, you're probably going to be coming into a negative divergence. So, look, it's a tough one. It's a sort of tough one to call, hey, a short on this thing. Obviously, once they sell it, they all run for the door. But, it's probably safer to have these little confirmation levels down underneath here as well. DXY, absolutely getting clobbered again this week, which is very odd because, as you can see, we had a whole bunch of that strong data coming into the end of last week, closed us on the highs, or very close to the highs, into this big resistance zone. And then this week, as a weekly, just straight bang down. Came and filled that body. The body filled down the bottom over here, and we've seen a little bit of a push up here. Obviously, we need to get this back up over here. That would be your flipping weekly. Back up above, sort of, call it 98. Was that 98, 98.20? So we'll see if this can actually sort of do something more than just one quick sell down in that. But yeah, certainly look, it's setting itself up potentially to have a bit of a double bottom on a higher sort of thing. But obviously you need to get above and you need to actually hold and see some actual momentum moving up over here. So job numbers could be the key for it this week. We'll sort of see how that sort of plays out. That's a bigger picture. The short term in that we've obviously got a little bit of uh, what's attempting to put in a little bit of a low here. Oversold, tipping up. If we can see a push back up above sort of 97.80, then, above this kind of zone, actually put it above 97.80 there. Let's put it above there. Above 98, we could say, hey, look, we've got a bit of a bounce coming on with it. And look, it's got the RSI. This is on the 4 hour to sort of support that move. But I mean, it's like trying to short gold, trying to get long US dollar. It's just endless tears. This thing has just been an absolute horrendous sort of trade through this year. Just quickly on gold, have a look at the gold silver ratio. This thing's also sort of come off very high because you remember a couple of months ago we were back up above 100, these kind of periods over here, and we're like, well, it's going to continue. No, bang, and it has just been boom. This has fueled silver to go through the absolute roof. But if we look at short term, we had a little bit of a wedge sort of forming down back over here, as you can see, and it failed. So a little falling wedge here, should be reversal, didn't, bang, failed. Similar kind of thing that you got almost going on here, a little bit of a wedge, no, not as sort of prominent as this one. You look at that, that's a proper little wedge coming down there. That should have sort of bounced up here, but it obviously didn't. Bang, failed. A little bit of a wedge kind of forming through here, failed again. We are seeing it in this little channel here now. So should this break back up over here, basically in short, doesn't mean that it's definitely moving in that direction, but in short, if you see this chart, gold-silver ratio moving down, it's obviously meaning that silver is stronger or more preferred metal than gold, and we've seen that because silver's like absolute, I mean, gold's been on a rip as well, so it's not like, okay, one's good, one's bad, but in a bull market, bull metal market, silver will outperform, outperform gold. And so gold, silver, like any sort of chart, the second one, bang, that means silver's the more preferred one, and you've been seeing this move down. Silver's been moving through to the top. So if we do see this break this little channel through here, it would mean of the two, gold would be preferred. It doesn't mean that necessarily they're going down, but typically you will see gold move a little bit not be as impacted as silver, if that makes sense. So silver's always going to kind of be a little bit more sort of like, whether it's doing better or doing worse, it's probably going to move a lot more percentage wise than gold. But it doesn't mean that sort of like, the market's necessarily crashing. It just sort of means that as this is moving down, you're probably going to see metals work together and still move higher. Should we see a breakout of this little downward channel here, move back up to retest the underside here, like we saw with this, they had the wedge, failed, a little bit of stuffing around, came back up and retested those levels. If we see similar to this period here, bit of a wedge, fail, you could expect this to probably come back up and test around sort of 85. This would be putting pressure on the metals a little bit, and I would be more inclined to sort of see a little bit of a sort of short term, possibly a week or so of weakness in metals should this break through this little level over here. So put it just above that high as well. And if we do get that alert sort of going off through there. All right, DXY we've gone through, gold we've gone through, copper. Still grinding along over here. Seems to have got a couple more headlines and little sort of bits to sort of keep it a little bit more elevated. In the whole scheme of things, you can see this 38% of this drop down here, where it got absolutely pulverized, is holding for now. So again, like anything, put in a new high, on it goes. I think if we do go up, this is where we're going to be looking around that 512 level. I do think that this is, I've said a few times that this will sort of probably sort of roll over down here. I haven't actually traded it for a period here because I've sort of thought, look, okay, we're going to come down here to sort of confirm a bit of a bottom. And then you get a headline out, it pushes, comes back down a bit, headline, pushes. So look, it's doing its thing. It's holding for now. I think if the metals, silver and gold, come off a little bit, I think we could probably see gold, copper, I gotta remember what the hell I'm doing. See copper come off there a little bit as well. And finally, just along with USD China. Now, this is an interesting one because, yeah, obviously I've been touting this a bit. We had the breakout, we had the back test, came through, hit the target. That's where we kind of thought, okay, this is the level for them to get through, 715. Didn't get that breakout, came in like with DXY, closed up into its resistance, opened the week, bang, slammed down. It hasn't broken down yet. It's still testing confluence of backside of this falling resistance, this long weekly support, and this horizontal weekly support. I think the fact that it broke this wedge, it's done its breakout, retest. I think it's still in play. Certainly 715 is the level for it to beat. 715 goes, I think gold and Aussie sort of pull back. That's how I'm playing this one here. Yuan has been strong through most of this year, pretty much through April, where it put in that big high over here. This is where it's like got hammered when Trump came out with the board because everybody thought, look, you know what? Last time Trump was in office, they devalued the currency 10%, and it's just been a straight dribble down since. Little periods of ups and downs, but more or less you can see if you go, okay, which direction is it going? That's where it's going, down, weaker. It doesn't mean that it can't turn around though. And 715 will be that sort of indicator for me to sort of say that, hold on, wait, 715, you've got your breakout, you've got your back test, got your higher high, and then you can start to sort of see, are they going to see some sort of little potential grind up channel like this? And this would come in line if you get a breakthrough here. You probably come up and you find a little confluence over here. Whoops, got that one. This is my first day using this stuff, so it would seem. That's where your target would be there, which you get a bit of a confluence of this horizontal and this potential sort of grind up channel. So above 715, looking for 717. That'll put pressure on gold and also put pressure on Aussie. Should we see those moves start to sort of play out? All right, that's it from me.